How much do you need to start day trading? As a beginner, you don't really get a lot of guidance as to how much you need to put into the broker. Should you use this broker, that prop firm? This video is kind of gonna consolidate that information for you as simple as I can put it. So a quick Google search, these are the most popular brokers to use. And then we have the most popular prop firms to use. So like, which option should you take? The main difference between a broker and a prop firm is that for a broker, you are putting in real money into the broker account in order to execute trades. That broker also has a paper trading platform, so you can also fake trade with their money, and that can also simulate real trading as well. As an options trader, it's more difficult to find a prop firm to trade off because a lot of these prop firms are mostly for forex or futures. If you are an options trader, this is going to be your best bet. And I would recommend having at least two, just in case one of them have technical difficulties, you have some issues with it, you still have a backup account. Typically, any kind of technical difficulties are pretty rare, so you may only have it here and there, really seldom. I've only had maybe technical difficulties with Charles Schwab maybe like 3 times since I've been using it for the past like 3-4 years. So FYI on that. My advice is to choose a broker that is a really popular broker. They have a long history of working. They have a lot of people using it because those are the ones where they are reliable. Interactive Brokers is a really good one. I believe a lot of Canadians use this. Charles Schwab is mainly for Americans. Webull is kind of more international. Tasty Trade, I've heard good things about that. E-Trade is good. Fidelity, I don't believe that is as popular. Moomoo's popular, I believe, in Asia. Robinhood is also really popular. What else? TradeStation, I believe this also to IG. But those are like the main ones that I've heard of. I would do a little more research into which ones you want. The differences you're gonna have between the brokers are their platform, as well as the commission and fees you have to pay. So every time you execute a trade, you are paying a tiny percentage, maybe a couple cents or like $1 or something in order to execute that trade. That is the money that the broker takes from you. So you pay that little fee to the broker, and then the rest of the money you put in the trade it goes to the actual buying or selling that contract itself. With these brokers, open a cash account. That is when you take the money from your bank and put it into this broker. That is the money you'll be trading with. And so the question is, how much do you need? Now, depending on what exactly you trade, depending on the ticker you trade, these are large caps. These are a little more expensive. Higher volume, higher volatility, hotter stocks, more people are trading them, they are a little more expensive. They will probably range around from upwards of $100 and up. Some of them, like Tesla, can get into the 2000s range. So I know that is not ideally what you want to use. 2000, for me, it's too expensive. I prefer trading tickers where they are like lower than like 500. If this isn't the price range you like to trade in, you can always look at small caps, and those can be a lot cheaper than $100. So you would have to do your research separately. If you are to trade these tickers, I would say minimum put in $5,000 in your broker. As you are trading, you may be in and out of trades within the day. You may take a couple of trades. Whatever money you put in the broker, whether it is $5,000, if you are trading with like say $200 for that contract, you buy it, you sell it within a couple minutes, you're left with $4,800 to use to trade later in the day. Another thing, these brokers have that paper trading platform that I talked about. So that is exactly the same kind of layout as the real money trading. It just simulates real trading. It gives you an idea of how to execute trades, understand the platform, and understand how price moves as you execute a trade. The only issue with paper trading is that you may not really feel the real psychology behind trading. So if you lose like $200 in paper trading, it may not really affect you as much, or you may not really learn from your mistakes because to you it's just like, oh, I didn't really lose anything. So real money, of course, when you lose real money, it's like, okay, how do I not lose this again? Sometimes it has that impact on how you actually trade. Now, you may hear margin account. These brokers typically also offer a margin option as you sign up for the broker. If you choose margin as your account type, It's basically borrowing money from the broker and then you have to pay it back. And it's kind of confusing. If you don't want to borrow any sort of money and have all this complicated stuff, I would just stick to a cash account for these brokers. Now, if you're trading Forex or futures, which I know a lot of you do, then that's where prop firms get very popular. Because futures can get pretty expensive to enter certain trades, a lot of traders like to subscribe to prop firms. These prop firms typically charge anywhere from upwards of $150 to sign up for their membership. So basically you pay $150 or so a month. And with that, as long as you pass the challenge where you are trading, they see that you are profitable, you're consistent, then they fund you with a certain amount. And then from there, you have payouts once you actually pass the challenge. As a beginner trader, you are going to lose money before you become consistently profitable. That's just how it is. Depending on the timeline, everyone has a really different timeline. So if you are to subscribe to these prop firms, you are basically paying that subscription every single month till you are able to be consistently profitable. If you mentally know, like, hey, it may take me, say, 3 years. Let's give that an example. 3 years to pass the challenge, to understand what you're doing, to understand how to trade. That's 36 months. If I do a calculation of $150 times 36 months, you are paying $5,400. So it is a much cheaper option to use a prop firm as compared to a broker. Depending on what market you trade on, what ticker you choose, whether your learning style is better with real money or fake money or with a real options broker, that is going to be where you have to decide whether you use a broker or a prop firm. And then from there, you kind of have these different numbers as to how much you are going to need to start trading. Trading is not cheap to learn. This is all investments in your education. So think of it like college tuition. College takes 4 or 5 years. However, you can be profitable within 2 years from trading. So just do your research, look at the different companies, how much they charge for commissions, and then weigh out whether you are more willing to take a prop firm route or a broker route. And then based on the broker route, you could always just paper trade. That's like $0. So just be wise in how you spend your money and do your research ahead of time before you jump into anything.